Are the days of low inflation behind us? You came here for the truth, so let me unveil that for you. Today we're going to talk about money printing. That's right, the helicopter Ben, or maybe Jerome Powell are definitely raining it down from the skies. But you also have to consider what's happening with the government. Governments around the world are applying different stimulus packages, and that is, of course, creating an inflationary spin like we've never seen before. We're talking about commodities, we're talking about many factors today, and I want to show you what's been going on. Now, you look at that, but also with every action, there's an equal and opposite reaction. That's an important point that I want to bring up today. I wanted to lead with this article right here. It's talking about Bitcoin as it relates to the mayor of Miami. In a recent interview, the mayor of Miami said that he bought Bitcoin right after the $1.9 trillion stimulus bill had passed, claiming that he doesn't think people will want to stay in dollar-denominated currencies. Now, personally, it doesn't matter what this one individual had done. That's not important. But the point that he makes here is interesting because the future is clearly going to be different than what we are experiencing right now today. You've got to look at it realistically. I mean, it is pretty obvious that the US dollar being the reserve currency has been waning over the years. I have shown you the dominance has been, falling down to about 59%. Still, of course, a significant part of the total, but I think we need to realize how much of the world, particularly that in the financial world, has changed. I did buy Bitcoin and Ethereum, and I bought it literally the day that the $1.9 trillion spending bill had passed. And then he goes on to talk about, and frankly, if they spend another $2.2 trillion on the infrastructure bill, Bitcoin is going to go up. There's no way people are going to want to get out of dollar-denominated currencies. And that really leads us into what we'll talk about next. As Jeffrey Gundlach mentions, the Federal Reserve apparently believes that these, inflationary pressures that we are experiencing right now are only temporary. They're transitory. And that, of course, just isn't the case. He's saying here, they don't know what they're doing kind of thing, but I actually do believe that they know exactly what's going on. So let's talk about those inflationary pressures right here. If you remember, as tech was rising and tech was getting all of the attention, I was saying go ahead and buy 7 2x4s. Get rid of those 7 shares of Amazon and buy 7 2x4s, put them under the mattress, you're gonna be rich. And now all those 2x4 billionaires are thanking me. And that's not the only one. You also should have been buying 7 ears of corn. Corn is the latest commodity to soar. Prices have risen 50% in 2021, and a bushel cost more than twice what it did a year ago. This is a significant rise. And of course, I've been talking about this whole time, trying to explain to people how there is this rotation, how the commodity super cycle is in full effect right now. Anybody who was listening to that hopefully was taking advantage of it, but even if they weren't, certainly we're going to be feeling the burden. I could tell you that right now. America's biggest cash crop has rarely been more expensive. So we are nearing highs. Of course, when you look at it, there is a chart down below, futures price performance of corn, soybeans, and wheat. You could look at corn just soaring, absolutely soaring throughout this period. Corn has been one of the sharpest risers in the broad rally in raw materials that is prompting companies to boost prices for goods and fueling concern among investors that inflation could hobble the economic recovery. That's right. You got problems right now that are certainly coming in from all these different avenues. I'm going to talk about that more in the Money GPS Insights, so stay tuned. But of course, right here, lumber prices have shot to more than 4 times what is typical, pushing up home prices and obliterating renovation budgets. And that, of course, doesn't seem to be stopping anybody from doing it, but that's just one aspect. So you've got lumber 7 2x4s, you got the corn, you've got all these different commodities that are rising. And according to groups like Goldman Sachs and others, this is only the beginning. Now, that doesn't mean it's not going to have any setbacks along the way, but you can certainly see that this has been growing, unlike what we've been seeing with tech. And I want to talk more about that. Before we get to tech, I wanted to talk about what's happening with all of the spending. And I'm going to lead up to this. Just hang in there for a minute. California governor proposes tripling spending on stimulus checks. Most individuals will get $600 and families get an additional $500 as state enjoys record budget surplus. They go on in the article here to basically talk about a $100 billion economic stimulus plan to triple the state's direct cash assistance program to reach an estimated 2/3 of residents. So they're going to be handing out money to the individuals. There's the whole talk about MMT. There's the talk about stimulus on all levels, quantitative easing, stimulus packages directly to the people, and so on. This, of course, is inflationary. If you look at quantitative easing and what they're doing there, if the money doesn't get spent and it's just simply buying up treasuries and sitting in the whole, basically the bank accounts and not moving around, the monetary velocity declines. I've done a video about that recently about inflation versus deflation, and that's important. But when you start doing helicopter money, that's a different story, because that means that individuals actually getting the money and they can go out and use that. They can go spend it on a TV. They can buy that lumber. They can do the renovation on their home. It's a different situation. This is something that will absolutely create inflation. There's no doubt about it. There is no argument, I believe, on either side. It is an absolute fact. Now, people will say that it's going to help people and so on. That's not what I'm arguing. I'm simply looking at the economic aspect. And I do think it's important to see where the money goes, how it moves through the system, and of course, the effects down the road, because if suddenly everybody's getting $1,000, $2,000 a month, what happens to the prices of goods? I found this chart to be very interesting. I wanted to bring it to you. You can look right here. They mentioned in the top right corner, with enhanced benefits, workers, take Pennsylvania, for example, can now make more on unemployment than they did at their jobs. And you can see on the left-hand side, I'll bring out the highlighter. You can see right here, minimum wage. And they are just telling you that $7.25 is the minimum wage. Depends where you are, of course. And then you look at it on unemployment, you're going to get about $11. You look at the case for the dishwashers, hotel clerks, preschool teachers. They're making more on unemployment. The argument, of course, on the other side is simply to raise the minimum wage. It would push everybody up. I think that what they're trying to do here is actually increase the minimum wage. I think they're also trying to bring in some form of MMT. The economic aspect of this, of course, is that prices will rise. This is going to, of course, push things up higher. And it's very hard to see the connection in between the two. Most people don't see the connection there, but ultimately, this is always patchwork. So it's saying things are too expensive. We need more money. So we're going to print more money, we're going to increase this, we're going to push this in this direction, and not seeing that it's all because of the activities of the central banks and the low interest rates that created the mess we are in the first place. If we could only address the root cause, there wouldn't be all this need to intentionally create inflation, a period of deflation in asset prices. For instance, if your house was 50% of the current cost, more people would be able to buy homes. More people will be able to actually spend money on other things into the economy. But instead today, you've got a real big issue that's going on. Speaking of inflation, this right here is the inflation expectations, and every month it goes up and up and up, and I don't think anybody should be surprised about that. This is what I wanted to get into though, because we're looking at all of these different stocks, in particular, let's say Amazon. I always talk about the 7 shares of Amazon. This is Amazon stock over the last year. And if I pull out the highlighter, I mean, it's pretty clear by the chart, but just to show you, this right here is July. Okay? And now we're getting there in a few months. A year later, And look at where the stock has gone. Yes, it's been trading within this range here, but the point is, quite frankly, that we're approximately at the same level. Now, money has been moving into the commodities instead. First, it was tech stocks leading the way from March 2020 into, let's say, this July or maybe even September timeframe where it peaked out. And then it's been sort of trading within that range. The money was finding a new home, value stocks, different types of stocks. But now we are seeing this as well. Alphabet, Facebook drop as Citi warns of ad growth slowdown. Many factors at work here. And I think it's important for people to pay attention to all the different aspects and look at the actual data and see what's happening and see perhaps where it's important to trim some of the fat off and place it where you believe certain assets are undervalued. And that brings me to the Money GPS Insights, where we look at the actual information, breaking it down and making it simple for the investors to understand. This right here is important. We look at the first thing, number one, that commodities were so low compared to tech stocks, compared to other stocks. And if you look at the sector as a whole, they were depressed in price and, quite frankly, attention in comparison to just about everything else. And then we have number two. Compared to everything else, tech stocks had been performing very well at the beginning, but over this last period, we have seen that tech stocks have not done very well at all. In fact, in the previous trading session, they really got pounded down. And then we look at number three. It's important to understand that there are actually three aspects to what we are seeing today, and that is supply chain issues, whether or not that's being contrived or exaggerated. That's beyond the whole scope of this. And then we have money printing beyond that. And then we have the commodities super cycle. All of those three things together are pushing the prices dramatically higher. Of course, there are other factors as well. But those three things, I think, should all be looked at, not just one of those. Those three things are pushing commodities up to new highs, and new highs all the time. And according to many economists, according to many analysts, this is only the beginning. It will go a lot higher, of course, bumps along the way. So take that to heart, look at the data, and I think it's important to address your portfolio as it stands today. All right, check this out. This is Google Trends for the term gas shortage. And you could see the spike and look at the areas that are obviously being affected right here that are searching this. If you look at the Southeast, I mean, that is, North Carolina, South Carolina, Alabama, Georgia, Mississippi, and so on. All of these areas are really looking at this. They're searching it online, and it's a really, really good indicator to see what's going on in the head of regular individuals. Google Trends, definitely something to check out. Now, if we forward over, I've got several pictures right here. Sky high gas prices. Looking at this one here, the gas shortage. They're talking about gas stations are running out. In Plymouth, North Carolina, lines around the building. 4 stations are out. This right here just shows you more lineups and so on. Now, this could just be simply people are getting too much gas, more than they normally would. They're hoarding the gas. They're putting in gallons. They're bringing it home and so on. But the point is absolutely simple, and that is people aren't prepared for these type of events. And of course, we rely on systems that are very fragile, as I mentioned in the previous video. And this right here brings that all together. The leader of the company whose fuel pipeline was paralyzed by a cyber attack warned state officials in a private meeting on Monday that supply shortages could occur even as it plans to reopen the line later this week. That's something you need to know. I heard a lot of people saying, no, this is not going to affect the price. No, this is not going to impact anything. But of course, it absolutely can. This is a very integral piece of the puzzle. When you look at how things connect to each other, the pipelines are really key. And it's not just one thing or the other. It's all of these things happening at any given time. I want you to know that the Money GPS Insiders is the place for me to connect to you directly. This is a way for me to email you on a daily basis, 5 days a week actually, where I'll be sending you the daily video so that we can skirt around all of the censorship and all the obvious playing around that they're doing, keeping the watchful eye on us, of course, got to tiptoe around that. And this is a way for me to get to you directly. So if you sign up here, it's absolutely free. It just gets the YouTube video over to you, and it's available to you at themoneygps.com. You'll see this picture right here, and you can sign up, put your email in there. If you found the video informative, hit that thumbs up button. I really appreciate it very much. If you want to learn about economics and you want that foundation, or maybe you know it all, but you got a family member or friend who really needs that simple foundational principles, definitely check out these books in the links in the description. And if you have not seen this video yet, you've got to check it out. Click it, and I'll see you there.